Yeah, so Bitcoin's been dancing right around that 20,000 level. And the reason why I was harping on 20,000 is because that happened to be the high from the last bull cycle. So in 2017, we saw this unbelievable percentage move to 20,000, and then the bear market started. Finally, we got into the next bull market. And then basically, when price came down there, you would expect it to have some bounce and some sideways chop. And that's exactly what we've seen here. It doesn't change my view that Bitcoin is not at a bottom yet. Bitcoin in its normal bear market cycles goes down about 80 to 85%. I think it's only down about 70%. And this is the first bear cycle the Federal Reserve has not been printing money during it, right? So in every past bear market cycle, the Fed's been printing money with QE and QE1, QE2, and all those. And this is this first cycle it isn't printing money. And that makes me wonder if at least we go down 80 to 85%, which gives me that 12 to 13,000 target, or could we actually go even a little bit lower? So I think that we're still going to see another leg down, minimum 12 to 13,000, and then I'll have to reevaluate if it's going to go lower after that.
Hello and welcome to Money Talks. In today's video, President and Chief Market Strategist at InTheMoneyStocks.com, Gareth Soloway, updates about current market situation including rate hikes, inflation, money printing, and the possibility of a recession. Gareth Soloway also shares his take on Bitcoin, Ethereum, and the impact of Ethereum merge on Bitcoin's price performance. Make sure to stick around till the end of this video where Gareth Soloway predicts the upcoming Bitcoin crash and how it will demolish 80 to 85% of the price.
I think that is a very important aspect about reducing energy, because I know that a lot of fund managers and investment portfolio managers, one of the things that they're always pressured on is being very environmentally conscious, right? So that's going to alleviate that issue. And then also the merge is going to change the way the mining is done, which almost creates it as a deflationary asset, almost like kind of a Bitcoin. So I actually think longer term, this is really bullish for Ethereum. And I do think that it makes it much more attractive to investors overall, not just for the utility purposes, but also for the savings and kind of a different way to invest versus holding US dollars and other currencies, fiat currencies. So I think that's very good. I think the biggest thing next week with the merge is it has to go smoothly, right? So, and this is big for the entire crypto market. Everyone's looking to that. They need to nail it to give the confidence to the crypto markets. If they do, I think you could get a little short-term upside, kind of the relief of, okay, it happened, it went smoothly. It doesn't change the fact that I think eventually Bitcoin's going to 12, 13,000, but in the near term, it should be a positive.
In the midst of the hype surrounding the next bull run, an intriguing piece of information about Bitcoin halving surfaced. The fourth Bitcoin halving, which was initially scheduled to happen in 2024, will now happen sooner than the scheduled date. According to NicheHash's data, Bitcoin's next halving will take place in 1 year and 157 days, which means we can now expect the halving in December 2023. This is somewhat of a good signal for the king of all cryptos, as historical data suggests that halvings are followed by major price surges.
Wow. So, I mean, with the volatility in the stock market, there's been some great plays. The markets had gotten crushed from June through July into early August. Then we saw the stock market stage a massive rally up, then a big fall just in the last couple of weeks before this latest bounce. So I would say in stocks, it's been tremendously good in terms of swing trading and day trading and kind of positioning yourself. And then I also think, gold is starting to look very interesting down here. It's looking like it's trying to hold support. And I think the biggest thing out there that investors should be paying attention to is the dollar and then the 10-year yield. And those both have been on a tear lately, although it does look like the dollar may have topped.
One of the two main talking points for the week in Bitcoin price action comes from a familiar source, the United States Federal Reserve. According to CME Group's FedWatch tool, the Fed's Federal Open Markets Committee is nonetheless likely to put in a repeat 75 basis point interest rate hike at its September meeting next week.
So short term, we probably have a near term top in the dollar. It doesn't necessarily mean we can't go higher in a few months, but there were some key things that actually happened here. But that was a big one for me. Like so much of this market has been driven by the strength in the dollar. And what I mean by that is as the dollar was going higher, stocks and risk assets were getting crushed. We even saw gold getting crushed, right? So the fact that the dollar near term has topped, it should give the stock market, crypto, a little bit of a reprieve to maybe have a small bounce higher.
For dollar watchers, however, there is already reason to believe that the risk asset comeback should cement itself in the coming days. The US dollar index, or DXY, fresh from 20-year highs, has fallen nearly 2.7% in just 4 days.
Point, the rally we had from even 2009 when the Fed began printing money was so vertical that it pulled forward a lot of the upside in the market, very much like you saw happen in China about 10, 12 years ago, Brazil 10, 12 years ago. And what's interesting about those markets is they've been chopping sideways for 10 years, actually more than 10 years. So if we go to the monthly chart on the S&P, this was the 90 run, the pullback, the 2000 up to 2007, the pullback. And then this is where the Fed started printing money. And look at that. That is not a natural market move. The question is, well, where do you invest? Well, the two charts I just showed you, to me, you don't want to obviously overinvest. But if I had to choose right now, US market be long or China slash Brazil and some of those countries, the South American countries, I would absolutely be going towards those for the next bull move.
Complementing the encouraging inflation data is a purely internal price trigger, the Ethereum merge, due around September 15th. The event, now set to become a reality after months of uncertainty, sees Ethereum as a network transition from proof of work, or POW, to proof of stake, or POS, as its hashing algorithm. Hype has been building on social media and beyond, and now analysts are wondering what the immediate aftermath will be, specifically whether investors will sell the news and bring markets lower immediately once the merge completes.
So definitely we're looking at that headline and core number on the CPI data. So the consumer price index, which basically is what the market's paying attention to so closely because it's what the Federal Reserve will likely gauge their next rate decision on, right? So if you still see very high inflation and it's not coming down, it's likely going to signal the Fed has to do 75 basis points at the next meeting. My guess is, considering, I mean, you look at oil and oil has collapsed into the mid 80 range or so. I mean, we've seen copper, we've seen nickel, all of these commodities have come down so sharply. It should be trickling through to the consumer price index, which means inflation should show that it is kind of fading a little bit. Now, I think the kicker is going to be this, is that I don't think we're going back to that 2% or under that the Fed really wants us to get to for years. And I think that's going to be a big issue down the line, as they're not going to be able to stimulate if we go into a recession. So if you think about it, every recession we've had for the last 20 years, basically, the Fed has stimulated in some way, whether it's printing of money or dropping interest rates or buying bonds to have on their balance sheet. They've been doing massive stimulus. That was all with 2% or less inflation. The fact is, we're at a point where unless they get that below 2%, they can't print money again to save us from the next recession. And that's the boogeyman to me. That's the real scary thing. If this economy goes into recession, how do we get out without the Fed's help?
So, what do you think will be the impact of Ethereum merge on Bitcoin's price performance? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.